Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Let's start the session. With employment data last Friday coming in very positive, traders now see little reason for Federal not to raise rate in December, which paints a bullish greenback scenario in the weeks ahead. Traders increased their long exposure to the US dollar after the strong non-farm data. So we can only expect this trend to continue. The theme of buy the dollar and selling everything else has returned and likely to continue as we head into the anticipated Federal rate rise in December. Official China trade surplus hit an all-time high over the weekend to show further evidence of how global growth is likely to remain subdued in the future. Imports were down for 12 consecutive months at minus 18.8%, with imports down minus 6.9% compared to previous. Key calendar events traders will look forward to this week are CPI tomorrow, was expected at 1.5%, down from 1.6%, and industrial production yearly release. U.S. non-farm payroll exceeded expectations to create 270,000 jobs compared to the 180,000 expected. Average hourly earnings were up 0.4%, monthly release, sending the dollar index to its highest level since April, and within striking distance of the multi-year highs. In Europe, German factory orders and industrial production both missed expectations and contracted unexpectedly last week. This adds further concern for the Eurozone's largest economy at a time when ECB are weighing up how much to expand their current quantitative easing program and dive euro lower. Once the scenario is combined with the stronger data from US and expectations of the famous rate hike, then traders have the perfect diverging theme, making euro dollar one of the preferred trends to trade it down. This week, Draghi speaks 3 times, and we have German GDP, which is fighting to stay above 0%. So plenty of potential for a lower euro this week. The Bank of England pretty much poured cold water of an earlier rate hike last week with their inflation report. This week we have one of the few decent numbers to come out of the UK in form of average earnings. Cash rates in Australia remained on hold and the obligatory threat of a rate cut remained in the statement. However, in the monetary policy statement, RBA appeared to have called a top with their unemployment rate, and this week just so happens to present employment data. Unemployment is expected to remain at 6.2%, but any move above 6.4%, previous multi-year highs, will only add further pressure to the Australian dollar, which is only some pips away from breaking below 70 cents against the dollar. The Canadian dollar had a tough week following the strong dollar and weaker oil prices. Building permits, which contracted for a second consecutive month, helped providing a further boost higher for the Canadian dollar, which has now tested 1.33 and clearly in bull mode and is a currency pair which is likely to attract buying interest upon any dips. Weaker dairy prices and higher unemployment saw the Kiwi dollar extend losses last week. So traders will now focus on the financial stability report and Graham Wheeler to see if there is further evidence of subsequent rate cuts. This week is a quiet week. We will watch these two tradable events in London time. On Thursday, 12 November at 12:30 a.m. Australian employment change, and on Friday, 1:30 p.m. U.S. core retail sales. I will talk in more details about these two events. Australian employment change will be released on November 12 at 12:30 a.m. London time. This release will help to shape Australian dollar trend for rest of the week, especially considering recent RBA's change of tone into a more neutral. It is forecasted at 14.8 thousand. Previously it was minus 55,000 or 5.1 thousand. How to trade this news? The deviation that we are looking for is at least 25,000. At 25 to 30,000 of difference could produce about 40 to 50 pips of movement in the direction of the difference. Expect to see the effect of this news to last minimum 45 minutes to 2 hours. If the deviation is really surprise, it can last for the day or it can change also the direction of the trend. One other important news to pay attention to is the unemployment rate, which is expected to drop to 6.2%. If we don't get a conflict with the employment change, then we will proceed with the trading plan. We will look to trade this using after news retracement trading method. We will wait for the market to retrace and stay out of the market during the release time. because during this release, usually it's famous about making spikes. If we get plus 39,000 of release or more, our decision will be to buy the Australian dollar against other currencies. If we get minus 10,000 of release or less, our decision will be to sell the Australian dollar against stronger currencies. We will only enter after we see a decent retracement from the initial spike and if we get those release numbers. So we'll buy the Australian dollar at 39,000 or more and we will sell it if we get minus 10,000 or less. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment downwards. The second news that we will watch this week is the US core retail sales that will be released on November 13 at 1:30 p.m. London time. US core retail sales is usually a good market mover, and with last week's non-farm payroll report surprising to the upside, we could very well looking at a strong release. It's forecasted at minus 4%, previously minus 0.3%. The plan to trade this release is straightforward. We are going to wait for 0.9% release or better to buy the dollar, or a minus 0.1% or worse to sell the dollar. If we get an in-between release, we will need to look at the pre-release market condition and sentiment. We'll see which trend the dollar is taking at this moment in order to make a decision, or just stay out of the market altogether. We will trade this news release as usual using after news retracement method. I will also pay attention to both headline and core retail sales figures, but my focus will be on the core figure. You can use the default pairs of dollar yen or euro dollar to trade this news. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. So then, I would like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.